back. Bitcoin buzz. Futures of the cryptocurrency started trading yesterday, and they soared, but futures are pulling back this morning. Take a look. Joining us right now to talk markets is Sean O'Hara. He is president of Pacer ETFs. Good to see you, Sean.
Thanks, Maria, for having me.
So you think that there will be a Bitcoin ETF?
I think there's several filed. I think on the physical side, I think there's a challenge. You have to be able to custody something to be a fund in the ETF world, and so I think that'll be the challenge for that. And then I think if they ever got past registration, you'd have a listing standards issue. I think it's more likely you'll see something in the futures area, which is rife with challenges, as you know, because the price of a future disconnects from the spot price, and you get these things we like to call contango and backwardization, and so you could actually get the bet right in the direction of the underlier, but still not make money.
Let's move on to just the broader markets here, because we're looking at a market that is obviously in record-setting territory once again. $6 trillion in market value gained. What are you seeing in terms of your clients right now? Are they still bullish? Where are they putting their money?
Well, this is my birthday today, by the way, and I got a great birthday gift this morning. Our AUM doubled today as from last year, so we've had a pretty good year. I think the money's flowing into protection strategies.
$1.5 billion AUM?
Yeah, about just a little under $1.5 billion. The protection strategies that we offer, the trend pilot stuff, has been doing very well. We've seen a shift away from U.S. a little bit into international, so we have a product based on Europe and a global product with a nice dividend attached to it that's gathered some assets. I think the valuations in the U.S., I think there's ways to find bargains in the U.S. If you look at like a Land Research or a Microsoft, which are two holdings in one of our ETFs, Microsoft trades at a reasonable valuation. They generate $31 billion worth of free cash flow. They just raised their dividend 10%. If you really want to go back to the Bitcoin conversation and play that, buy the technology names to invest in, speculate in the other thing. And so buy chips and storage, if you will, as opposed to Bitcoins.
You've been in finance for quite some time now.
Do I look that old?
When you look at what's going on with Bitcoin,
I'm sorry?
Does it look like a bubble? And what do you tell investors about how to play it?
Of course it looks like a bubble.
Wait, you're talking about Bitcoin or the market?
Bitcoin.
Oh.
Yeah, I think that's the assumption that I made. Of course it looks like a bubble. It's kind of silly if you think about it. I was thinking about connecting the millennials and the Winklevoss and Bitcoin. And so you have these theoretical millennial billionaires who made this money on Bitcoin. And the two things they buy are Legos and a ride on a spaceship. We're doomed if that's what the future looks like.
But to their credit, they do have a legitimate business that they are clearly promoting. Yeah. It is a Bitcoin exchange.
Yes, and the
pricing on the CBOE futures is based on the pricing done by Gemini.
Right.
So that's different. They're betting on it, but not. But they're trying to make it an established asset.
Yeah.
My analogy was in the gold rush in the 1850s, the people who really made the money were the dry goods stores. And so they're the equivalent of a dry goods provider today, as are the technology names. And so
you're saying you've got to be prepared to work for it and not expect to get loaded overnight.
Exactly, and I think that's the allure.
Sean, before you go, we've got the Fed meeting today, two-day meeting, kicks off today and tomorrow. Fed's expected to raise rates tomorrow. Impact?
I think negligible. I think what will happen with the Fed is I think they'll look at wage growth as opposed to other things to determine whether or not they see inflation bubbling up, and I think that's the only real way you get any wage growth. There's this thing called Moore's Law in technology that has driven down the price of technology over years. There's a Moore's Law for inflation taking place because of the technology that may be muting inflation, and so the real enemy of the Fed is to try to tamp down inflation. And so I think they'll be cautious as they look at that. If we get some good solid wage growth, which everybody hopes, then I think they'll look more aggressively raise rates.
Sean, I think you look great on your birthday, by the way.
Oh, thank you very much.
Dividend stocks have been the de facto bonds because of low interest rates. Do you see that changing significantly with interest rates going up?
A little bit. I think, there is great yield out there. There's a danger in buying high dividend paying stocks because they tend to disappoint over time. We would rather buy stocks with high free cash flow and free cash flow yield that pay dividends that can support them and grow.
Good analysis. Sean O'Hara, good to see you, sir.
Thank you very much.